Good afternoon. This is Rich Nelson with the afternoon commodity comments. Today is Friday, March 1st of 2013 here. So as far as action today, we got to speak of a little higher trade for both corn and wheat. Both of them finishing up around 5 to 6 cents higher. Soybeans did slip a little bit, down 5 cents by the closing trades here. As far as corn, the biggest news for this whole week has really been this resurgence in the cash market. And that has been actually mostly an ethanol issue here. The fact is that ethanol producers, as of the start of this week, actually, were running about positive margins of around 4 cents per gallon. And that was also reflected, that positive margin was reflected in Wednesday's weekly ethanol production report, which showed that ethanol production in the previous week was only 9% less than last year. That's actually quite a bit better than the recent weeks, where production was running anywhere from 13 to 18% less than last year. So we have seen some resurgence in ethanol production. It's not going to be enough to actually change the whole big picture, but it is something which has changed the short-term mindset as far as corn. Over on soybeans, let's also point out this morning's news was primarily China-type news. The China Purchasing Managers Index, this one by the company HSBC, by the bank, that one did show a drop in the activity for the manufacturing sector from January to February. So that did have some people questioning whether China will be very aggressive buyers of soybeans here. Keep in mind there's actually no correlation between economic data out of China and actually their demand for soybeans. But the trade does trade it like it is an issue here. As far as wheat, we did mention a little higher prices today, mainly following the corn as well here, as they are both tied together as a feed sector here. However, some negative news actually this morning was the fact that Ukraine, some people suggest that they will be exporting wheat back again as early as April, and that between April and the end of June, they may have as much as 2 million tons of wheat available for export. So that's something to keep in mind here as well. But while this is all kind of mixed news as far as grains, we got to point out there are some outside market issues to look at here. The fact is the U.S. dollar index up another 32 points here today. Of course, this is a brand new high for the U.S. dollar value for the entire year. In fact, the highest value since back in August. And keep in mind, guys, a rising U.S. dollar is typically bearish for commodities here. So the fact that grains are actually holding the line right now against the bearish tide of outside market pressure from the U.S. dollar is actually pretty respectable here. Over on livestock, April cattle up 17 cents here today, simply in reaction to yesterday's very good cash cattle trade, mostly done at 128. So a good resurgence in cash cattle trading, and that was of course due to this blizzard we had back on Monday. While this is a slaughter issue number one, keep in mind we did have 57,000 head of cattle that weren't slaughtered this week compared with last year. So we do have quite a bit of effect as far as slaughter numbers. The other effect, the carcass weight issue, the growth rate issue, is actually a much bigger issue because once you upset these numbers as far as growth rate right now, it impacts slaughter weights for actually the next 2 to 4 months. So that's a very big issue and should be something which does help us as far as pricing throughout the entire month of March as well. Over on hogs, up 15 cents here today after a very disastrous February for cash hogs. Cash hog prices lost $12 in the month of February. Looks like we're finally seeing some stability here. While we do have some numbers still out there as far as market-ready hogs, due to those last 2 weeks of storms. In fact, hog kill I see here down 43,000 head compared with last year in the past 2 weeks due to these storms. Keep in mind, this is probably something which has been factored in the market, and cash hogs are now beginning to stabilize. In fact, today's trade was actually steady to 50 cents higher in many locations. So maybe we're seeing this point where we've got all this bad news out of the hog market. Maybe by mid-month we'll see some stability. In fact, maybe by the end of the month, maybe we can start talking about some higher trade beginning. Keep in mind, hog prices typically do advance very strongly as we go from spring into summer. And that transition point is typically around March, maybe early April as well. So we'll be watching that one very closely in the coming weeks. But as far as this action for the week, certainly has been kind of muted as much of the trade has been looking at the sequester issue, which will take effect as far as tonight at midnight as maybe a deterrent for actual trading here. So we'll see next week if we actually do get a rebound in volume and maybe some bigger price movements on both grains and livestock. So this is Rich Nelson with Allendale.